Most real estate investors are flying blind. They make 6 and 7-figure decisions based on gut feelings, outdated estimates, or whatever some national news anchor said this morning. But real estate is local, and local data is messy until now. I spent the last several months building the compendium. It's an institutional grade market intelligence engine that tracks every single transaction in Fall River and surrounding cities and towns over the last 25 years. We've audited thousands of sales across single families, condos, and multifamilies to find the truth behind the noise. Why did I build this? Because real estate has technical signals just like the stock market and crypto. The compendium allows us to see these signals months before they hit the mainstream. We aren't looking so much at where the market was, we're calculating exactly where the market is going. Over the coming weeks and months, I'm going to open up this data. We're going to dive deep into these records to determine the actual cost of liquidity and the hidden bull signals that prove what I think is that 2026 will shape up to be a historic year for the South Coast. We're going to find the signals before anyone else so we can move while the rest of the market is still guessing. This is technical analysis for the real world. This is the compendium, guys. Let's get to work. All right. So what is technical analysis? All right. Technical analysis is the study of past market data, primarily price and volume, to forecast future price movements in stocks. It relies on charts, patterns, and indicators rather than just company fundamentals. Okay. If you've ever been in my office, I got charts up all the time. I'm looking at stocks and crypto, and they look like this. All right. I want to build something like this for real estate. So let's talk about Fall River. The last 25, 26 years, okay? There were 16,342 sales. 46% of the volume in Fall River itself is single-family homes. 2 to 4 unit multifamilies make up 30%, condos 6%, and then 5 units or higher is 6%. Condos 16, sorry. 5 units or higher, 6%. So you can see here, what does this tell me? The majority of Fall River is really open to first-time buyers, guys. All right, single-family residential, 2 to 4 unit multifamily. We break those out, those two categories of multi, because 5 or higher is commercial, which means 25% down payments. 2 to 4 unit is first-time buyers. Okay, so totally different set of, things that make up that market, totally different set of factors, totally different buyer pool. So it's important we separate them. Now, let's dive into those multis and see, all right? So out of all the multifamilies that sold in the last 25 years, 2 units are 27%, 3 families are 45%, 4 families 11%, and again, 16.4 is the rest, right? So 3 families are the bulk of the market in Fall River, okay? Now, what does the long-term trend look like in Fall River? You can see here, okay? It's a little bit of an eye chart. We're going to put these in the blog too. I'm going to have all this put in the blog on our website. All right, so the red line is total transactions per year, total sales in the city of Fall River. The blue line is total sales volume. Okay, so you can see back in 2000, there was $43 million of volume, 372 sales. We had that peak in 05, right? We bottomed out 2011. Okay, we had a COVID peak that was actually higher in transactions and volume than the 05 peak, right? That actually bottomed out in 23. In the last 2 years, we've been running up, okay? So what is the sentiment in the market? Because that's important. You have to understand sentiment. So I asked 3 different AIs to summarize what the consumer sentiment is in the real estate market for the past year. So Gemini first, in 2025, U.S. consumer sentiment remained deeply frustrated as record high prices and stubborn mortgage rates left 73% of people believing it was a bad time to buy, trapping the market in a standoff between hesitant sellers and priced out buyers. I ran this AI thing today. I did say this last week in one of my videos, right? The market's like stuck. All right, ChatGPT. In 2025, most Americans felt it was a bad time to buy a home. Okay, these are the sentiment, affordability concerns. Grok, my boy Grok. In 2025, U.S. consumers viewed residential real estate cautiously due to high mortgage rates, affordability issues, and economic uncertainty, with sentiment indices reflecting most seeing it as a bad time to buy. Okay, you can say that, but look, everything turned up, right? but it was very unaffordable time. Okay. So this is the breakdown of Fall River last year. So what did we actually see locally? Okay. So 618 sales, $324 million worth of volume. Okay. The majority of that was single family. Next up, 3 families, very consistent with what we saw in these charts over the last 25 years, right? Kind of holding true. Okay. Next, condos, although condos sell for less. So transactions was condos, 2 families as far as volume, and so on. Okay. What was interesting here is the change on days in market. That's the key, guys. All right. Properties took a lot longer to sell last year than the year before. All right. And you can see that here. Single family is slightly faster, and but days on market jumped. And we're going to do some more data as far as sale price and list price. We'll get into that over the next couple of weeks, but I wanted to kind of give a light overview to start. Okay. So this is the data that we have. Now, if you look at the trend line long term, it really sticks to what these AIs are saying, right? If we dial in a little bit, this is the blue line is single family homes. Okay. The red line is condos. The yellow line is 2 to 4 units, and 5 or higher is the green line. So this is the 25-year line for Fall River. Okay. And you can see how, over time, these prices were actually at one point, the 5 families, which are the biggest buildings, right? They sell for the highest average price, which I'll show you in a minute. And they were actually lower in the great financial crisis at the bottom of the market than single families, right? Condos are kind of always at the bottom, but you can see here with 3 families kind of lagged. They were ahead, then they lagged for many years. And then right around here, 2017, 18, 3 families started to pass single families. And this is median sales price, guys, okay? Year over year percentage change, which interesting is you can see here, same colors as the other one. Condos are very volatile, right? Look at the volatility in that red line, how it shot up and then shot back down. Condos are very volatile. Everything else, though, the past, since maybe, 2017? So if you look right here, from about 2017 till now, all 4 of these have been really trading in a tight range, okay? So the year over year changes are kind of smoothing out as Fall River matures. And there's been a lot of changes in Fall River. You can see that right here, how the market has just exploded in our city. And we know that, right? All right, here's an interesting chart. Now, how does Fall River compare to the rest of the country? Okay, so each of these groups right here, this is single families, condos, 2 to 4 unit multis, 5+ unit multis. This is the Case-Shiller National Housing Average, and then the S&P 500. That's the benchmark for everything. Let's compare real estate to it, okay? The blue bars, that's the entire range, the entire 25-year range from 2000 to 2025, okay? And then we broke it down a little more to look at the average return since 2020. That's when everything changed in Fall River. You can see it right here. Look at what happened on these charts from 2020 on, right? Everything just started shooting up, especially the big stuff, right? The big multis, okay? So if you look here, in the last 5 years, single family, so this is average return per year since 2020, okay? So single families have been doubling in the last 5 years compared to the long-term trend, right? So from 5.5% a year return to 9.7%. Condos have been relatively flat, right? They haven't changed much. They just kind of always have returned about 10%. 2 to 4 units, almost doubled from 8% a year to 15% growth in the last 5 years. That's every year. 10% historically on the big buildings, up to 16. What's so interesting, guys, is that for the past 25 years, Fall River market has beat the national average in all categories. This national average is really single family homes, but you can see we've beat it in all categories, okay? And in the last 5 years, we've really beat it, okay? So that's good. Fall River is a healthy market, which we know it's growing. There's a lot of things happening. There's a lot of headwinds, which we've talked about in other videos, but it's good to see. And multifamily in Fall River, the last 5 years, okay, has beat the S&P 500. Think about that, guys. The S&P 500 has been returning record highs, and the returns on multifamily in Fall River have beat the S&P 500. I didn't expect to see that. I got to be honest with you. That was surprising, all right? So kind of in line with what the AIs were saying about market sentiment, the key thing being buyers priced out. I mean, we've shown that here, right? We can see that here with the price increases. What about all-time highs? So if we look in Fall River, all right, and we ask ourselves, what we want to see, when was the all-time high of each category of property set? Now I went a little more granular here, and we had a lot of all-time highs last year. Single family, the all-time high single family sale in the history of Fall River was September 22nd last year. I'm going to show you that one in a minute. Actually, we'll look at it right now. Right here on Dickinson Street. Waterfront property, $1.4 million. All right? Beautiful property. That sold in Fall River last year on September 22nd, all-time high. All right? Condos, the all-time high was in 2024. 2 families, the all-time high was early 2024. 3 families, the all-time high was August 18th. That was this one right here on Spring Street. Beautiful renovation. $980,000 for a 3-family in Fall River, guys. That is an incredible number for the city of Fall River, okay? All-time high on 4-family, May 9th of last year. All right, that was this one right here on Tripp Street. 177 Tripp did $950. So the 3-family all-time high is more than the 4-family all-time high, which is interesting. Typically, you would think it would be the other way around. Nice 4-family, all right? And then the 5 families was 2024. The 6 families hit the all-time high last year. There was this one for $1.4 million on Alden Street, 1.45. So it's a couple of buildings in one. It's kind of a different kind of property, but again, technically 6 units, all right? And then so on. So a lot of all-time highs last year. All right, so this is the type of data we're going to look at. I'm kind of setting the stage here for you today. I want you guys to get an understanding of what we're looking at, what data I'm trying to track. I got data from Boston, Brockton, New Bedford. I'm going to start comparing to see how we're doing against them. Big takeaway here, guys. Fall River multifamily beats the S&P 500. Totally shocked. I'm not doing a Bitcoin or Tesla chart on that because it's embarrassingly crazy how much those assets beat real estate, but S&P 500 is the benchmark and Fall River multis have beat that. So that's good to know. Our market is still growing, a lot of headwinds coming our way, but I think that the big drivers this year are interest rates, right? So I'm trying to look for some correlations there to see what the lag is when rates come down, what our market has traditionally done, and it's this type of data that help us make smart decisions, right? All right, guys, so that's it. The Fall River Real Estate Compendium that we will do every week. That's my goal every Monday, to bring you some more data from this thing. Share it. We got blogs on the website. We're going to start posting these, and comment below. What data do you want to see? What questions do you have? What things did you see in this video that you think are wrong? And remember, all this data is sourced from the MLS, right? So 16,000 transactions with 16,000 people that enter data. All right. I've already found some bad data in there. There could be other data as well. I try to check as much as I can. If you spot something that you think is wrong, or there's another multi or something that I might have missed, comment below. Let me know. All right, guys, take it easy. Looking forward to building this out with you guys and hearing your feedback. Thanks.